Tiff Macklem and the Bank of Canada are at it again. They raised the overnight rate by another 25 basis points. That's 2 meetings in a row now where they've hiked rates. We're sitting at a cool 5%, the highest it has actually been since 2001, and by far the most rapid rate hiking cycle we have been through in this country. So I want to take a look at that with you, kind of compare our market now to what it looked like back in 2001, plus a little more, all in today's video. How's it going, everybody? It's me, Rob Marsiglio. I am a real estate sales representative with Keller Williams Referred Urban Realty. I'm out here in Durham region, helping the people of this part of the greater Toronto area, but also doing my best to bring you weekly content to keep you up to date as what is happening with GTA real estate. And today, like we said, the big majority of this talk is going to be the rate hike. Before we do get into the important stuff, I want to just take a second to admire this beautiful picture. Look at this getup I have on. This is out in Kettleby at my noni's place. Maybe I was a bit younger than 11, which is my age in 2001. Last time rates were this low, but look at that. Got the nice chain, having fun is what that says right there. The T-Rex shirt, I love this thing growing up. Anyways, that's not what you're here for. This is what you're here for. The Bank of Canada raises the policy rate 25 basis points, continues quantitative tightening. That was the headline from July 12th, just this past Wednesday. If we pull out and look at the explanation from Trading Economics, you can see that the overnight rate was raised by 25 basis points to 5% in July of 2023, as expected by the markets. Really, the whole idea for this video comes from this tweet by John Pasalis, where the last time the Bank of Canada's policy rate was this high was in 2001, way back when Rob had that awesome mohawk, that really cool T-Rex shirt, and the fun chain. But again, more importantly, the average price of a Toronto home was $251,000 back in 2001. And today, that same home, or the average price in Toronto, is $1.2 million. What I did here is on the Trading Economics, I just drew a line to kind of paint a picture as to where we were at. So back in, this is March of 2001, we were actually in the midst of a rate cutting cycle. They cut rates, came back up a little bit in 2003, dropped them again in 2004. Kind of last peak that we saw was back in late 2007, early 2008, before they dropped to kind of these historically low rates that we saw for the better part of a decade and a half. And now you can see we're back to the same levels that we were in March 2001, but we're on the way up this time, not on the way down. Do we flatten out here for a little bit? Do we keep hiking? That's to be determined. And just to illustrate kind of where we were, this is the headline this is the end of 2001 after rate hiking cycle. So you can see that the Bank of Canada cut interest rates 9 times in 2001. And this is kind of what the schedule looked like. So this is weird how it works out, but this is January 2001. They cut it from 5.75 to 5.5. And then here's this March level, March 2001, where it got down to 5%. And you can see that by November 2001, we were back down to 2.25% for that overnight rate. So when I saw that tweet by John, I thought to myself, that's really cool information, but how can I kind of maybe broaden it a little bit, bring you some more value? And I said, let's take a look at a few more cities, the ones that my viewers are tuning in from, to see, what did real estate look like, detached homes specifically in your areas back in 2001 versus where are they at today? And up on the screen is the list of cities I'm going to do. So we're going to start with Toronto, just the detached. Oshawa, Whitby, Ajax, Pickering from Durham region. We go Newmarket, Aurora, Markham Vaughan, Richmond Hill from York region. And then for Peel, I'm going to focus on Brampton and Mississauga. So first off, the average price of a detached home in 2001 across all of these markets. So we have ranges anywhere from, Toronto being the most expensive detached home, just kind of like it is today, $365,000 roughly. Oshawa was and still is kind of the most affordable detached market, really out of all the different markets that I would be covering. And their detached price in 2001 was $163,000. Fast forward to today. So these are the average detached prices in March of 2001. Like I said, when the rates were last at 5%. And 2023 average detached prices. This is from the most recent kind of group of Market Watch data we have. So that's from June 2023. You can see our most expensive average detached price was actually Richmond Hill, which was just over $2.1 million, the average price for a detached home there. Like we said, our most affordable market was still Oshawa, $929,000 roughly. Toronto at almost $1.8 million. Let's see what those look like as a percent change though. And you can see that we have a range anywhere here from 388% increase like we saw in Toronto to all the way down here, Richmond Hill, 536% increase from 2001 to 2023. Brampton, 456%. If you come up to York Region, Aurora kind of saw the biggest jump there other than Richmond Hill. And then in Durham Region, everybody's solidly over 440, about 440%, with Oshawa kind of leading the way at 466, 467% increase in the average price of a detached home in that time. And that's like twofold. It's kind of cool for the shock and awe. Not cool, really. It's sad how far prices have come up in just 20 years when you're talking that things have, in essence, quintupled in price in that time. But it also kind of, it's a bit of pushback, I feel like, for maybe the generation a little older than me, the old back in my day crowd, old man yelling at the cloud saying, back when I bought my home, it was 18% interest rates. It's like, well, yeah, but look at the reality of what new home buyers these days are trying to navigate, what they're trying to deal with at rates that, yeah, way less than the 18% that you paid when you bought back in the late 80s, but at price points that, if we stretch this exercise back even further, it would just be ridiculous numbers. We talked about where we were at in the rate hiking cycle in 2001. So 2001 in March, we were on the way down. Rate cuts were in play. We were passing 5% on the way down. Now we're passing 5% in July of 2023 on the way up. But what does the market look like right now at this point in time during this rate hiking cycle? And at this very point in time, so this is the weekly sale count and median sale price for freehold properties, you can see that we had already started. This is kind of back in April, May. Prices had really peaked and started to fall off. This could be attributed to some seasonality for sure. Same as the sales cycle, we always see sales kind of drop off as we head into the summer months. But I really feel like trends like this are just going to be exacerbated by these rate hikes. The buyers that I'm speaking with, a lot of that is just pull back, pull back, pull back. We want to wait to see what happens with the market before deciding to jump into anything. If we pull back even further and look at our monthly data, this is comparing 2022, kind of the big fall off in prices we saw, versus 2023, again, where we peaked in May for a freehold property in the GTA, came off in June. And so far, based on only about a quarter of the sales that we saw in June, in July, we're at 1.2 million. We're down about, I think it was 5 and a bit % off of prices from last month, this month. And lastly, what's happening with inventory is that we've already started to see it climb. The last rate hike was right in this pocket here. I'm not saying we've gone parabolic, but you look at York Region, it's been a pretty straight shot up. Everywhere. Like the Toronto freehold market leveled off and then kind of took off again week to week. So again, this is another trend that I would expect to see continue and kind of be enhanced, exaggerated by these rate hikes. I hope this exercise brought you value, either in the information or maybe some entertainment, just to see where prices are at. In 2001, last time we saw an overnight rate at 5%. Just how drastic that difference is now. Like we said, 500% increase in prices in some areas. Where do rates go from here? I'm not really sure. That's something we're going to have to pay attention to. But as for the trend we are seeing with prices, with sale counts, with inventory building, I think we can expect to see those trends continue, both based on, again, the seasonality of these slower summer months, but also kind of the apprehension, the kind of hit consumer confidence that has been as a result of these rate hikes. Thank you so much for sticking with me through a whole nother video. Again, if you enjoyed any of these charts that I shared with you today, please feel free to head on over to Twitter and follow me there, where I do update charts pretty much on a daily basis. I'll be posting something, and if you have some idea of something you want to see, leave it in the comments below, leave it on my Twitter as well. I'm happy to try and muster something up for you. Until we do speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And, while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.